Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. Today we have an interesting guest. His name is Josh Rhodes, and he's the founder of Crypto. He's a full-time crypto investor, enthusiast, and business owner. Josh got his start as a real estate investor and marketing agency owner before discovering the power of crypto as a wealth-building asset. And of course, you guys would be thinking, why the hell are we planning to talk about crypto in July when we are going through a crypto winter? We have seen Terra Luna USD collapse. We saw 3AC collapse, and there were a lot more things as well. And just now, today, I read that Voyager has filed for bankruptcy. Celsius is trying to get out of all this mess. So this would be interesting because Josh helps the crypto curious safely understand how they can invest in the greatest financial technology in history. So welcome, Josh.
Thank you so much. Honored to be here.
Absolutely. No, I'm going to have fun with this thing because, as I mentioned before, I love real estate and I'm crazy about crypto. I'm passionate about not just crypto, but as a blockchain, as a technology. And it's here to stay. People keep talking about currencies, this, that. Oh, I can't use my Bitcoin as currency or Ethereum. I'm like, no, there is a real use case behind those. And you got to understand blockchain as a technology. So before we get started, the first question I ask everyone, tell us something funny or interesting about yourself.
Funny or interesting? Gosh, I grew up in the middle of nowhere, Alabama, just rural, and was the first person from my family to graduate with a college degree.
Wow.
And played Division I baseball. That's kind of what got me out of I basically grew up one generation removed from extreme poverty is the way I like to explain it. So my dad came home from Vietnam as a United States Marine and started a lumber sales business, and basically made enough to just keep me and my little brother out of poverty. And he was a small business owner, and we had money, but we didn't have enough money. And I remember being in the home office with my mom balancing the checkbook one day, and she kind of pointed at this crazy book by this crazy guy named Robert Kiyosaki.
Rich Dad, Poor Dad.
Yeah. And she wanted me to read it.
Yeah.
Because it was almost like, hey, we missed the boat, but you don't have to.
You shouldn't. Yeah. No,
yeah.
That's great.
So that book, along with a lot of other, things, changed my life. But yeah, that's kind of where I'm from and a little bit of background there.
So that's funny, right? Coming from rural Alabama to understanding and investing in crypto, right?
Yeah.
When a lot of the people living in the, Bay Area and whatnot, New York City, don't understand crypto. So that's pretty cool. What are some of the assets you invest or own right now, and why?
A lot of different ones. I as an enthusiast and as an industry evangelist, I must say that Bitcoin is the apex asset.
Yeah.
Yeah. And so I'm always dollar cost averaging into Bitcoin. That's always a part of my strategy. But I also am not a maximalist. I believe in the utilities of the other altcoins. And for those of you listening, they're just software companies basically that are using blockchain technology. And but I think there's some awesome ones out there. I'm an XRP guy. I love what Avalanche and Elron and a lot of the layer 1s and the layer 2s.
Polygon.
Polygon. So I really enjoy the assets that it's almost like the gold rush, like picks and shovels, or the era in which the railroad barons were
Right.
building railroad tracks across the United States. What are the railroad tracks of the future blockchain society? That's what I've got my head on right now in terms of investing. So obviously, like Ethereum being programmable money,
Yep.
and 70% of altcoins being built on that, that's
Correct.
hard not to invest in. So anything that has a network effect and an actual business utility or solution, that's what I'm looking at currently.
And do you invest in anything other than crypto? We did mention real estate. So
Yeah, real estate and crypto are my
Okay.
those are my powerhouses, but I've flipped dominantly towards crypto in terms of proportion of portfolio.
So when was your first real estate investment?
One of the first, the first was 2006, but my first flip is an interesting story because the day I finished, I was putting a for sale sign in the yard the day that Bear Stearns went under in 2008. And I remember on CNBC and all the headlines, and this was like one of the first dominoes that started the subprime mortgage crisis. And here I am. I have spent 6 months of my nights and weekends renovating a house by myself, just really doing
so it's all sweat equity.
Just infant baby at home, poor, my wife, it was one of those great moments of ignorance. I did it all myself, but as I'm putting the sign in the yard, car slow rolling down the street, and I literally, like a crazy person, walk out into the middle of the road and wave them down. And I give them the old fashioned roll your window down crank motion, and they roll their window down. It's a father and his newly graduated college daughter who just got a pharmaceutical sales job here in the city of Birmingham, where I live. And I said, "Hey, are y'all looking for a house?" And they were like, "Yeah." I was like, "Well, come on in." Next day it was under contract. So I don't know if they heard the news about Bear Stearns, but I got out by the skin of my teeth.
Oh, that's crazy. So that worked out, it seems. But then when and why did you start investing in cryptos if real estate was working out?
I guess I was lying. I think the other part of investment that I was doing, I've had a lot of small businesses that I've invested in terms of assets. And so, that I'm a part of now, or that I own. So being a real estate investor and being a business owner taught me a lot about, obviously, cash flow, assets, liability, all of the financial things that you need to know about. But then when I bought crypto, I tell people I wish I had this romantic story, but I FOMO'd in like everybody else does.
Yes.
And 2017, but when I actually, and this is kind of like what I tell people, it's like, you kind of just need to buy a little Bitcoin, buy a little Ethereum, and get your feet wet, because people who pay attention. So I started paying attention, and I was like, "Oh, wait a second. This isn't just like shiny object syndrome. This is a future. This is internet. This is like big movements."
Yeah. This is 99.
Yeah.
90.
So then I fell in love with it, read the Bitcoin white paper, understood 60% of it because I don't speak in formulas in calculus. But
it is complicated.
Yeah, but I understood the concept behind it, and understood. I certainly understood, because of the subprime mortgage crisis, the problem of centralization and censorship and fiat manipulation and all that. That I eventually read the Bitcoin Standard by Safidi and Amos.
That's a good book.
So you read that, it's game, set, match.
Yes.
It's all very easy from that point on. So I fell in love with it.
Oh, that's great. So that's so interesting. You started in 2017, but then you came up with some kind of framework, right? Crypto wealth building frameworks. What is it, or what are those?
So I call it the crypto flywheel method, and it's basically a culmination of what I've learned from great authors and strategists and leaders. But I stole the flywheel analogy from Jim Collins' book, Good to Great, when he analyzed the great companies of history and talked about the flywheel method of how, like a flywheel in the industrial age would create prosperity, velocity, productivity, and energy in business. What would do that into my personal financial life? And so I cherry picked from the great advisors like Kiyosaki and so forth: cash flow, appreciation, and leverage. You got to have cash flow. That's oxygen.
Yep.
That's house money. That is things that keep the wheels greased, if you will.
No, and sorry, I'm going to interrupt, but that's very important, because when you and I both, I was investing in real estate, the whole reason was, rich dad, poor dad, and even more than that was cash flow quadrant, right? We want cash flow. I want multiple streams of income. So when I started investing in cryptos, they just did not align. I'm like, okay, my investment philosophy is I got to have cash flow. So that's why I started looking at, providing liquidity, right? So that I can generate cash flow. And then somehow I stumbled upon mining, and that just changed, because Bitcoin mining, we generate Bitcoin, we pay it out every month. I get cash flow. Plus I get another benefit like real estate is the tax benefits. We depreciate the entire cost of hardware in the first year.
Yes.
So this is very important. Sorry.
Yes. No, those are perfect examples that fit inside the cash flow side of the crypto flywheel. And then I use those residuals, if you will, to dollar cost average consistently into things that I truly believe in long term, that are the scaffolding of the future, like Ethereum, XRP, whatever you believe in. I'm not shilling coins. I'm just examples. Like, you almost have a religious conviction about their use case in the future, 3 to 5 years, even. Doesn't have to be 50 years from now. And that becomes the bedrock of your portfolio. That's really where most people start and stay in their crypto journey, is buy and hold. But they end up buying things like meme coins, Dogecoin,
Doge and Shibu, and then they complain.
Right. But that's I call that the crypto slot machine. Like, that's just gambling. What we're doing with the flywheel method is the antithesis of crypto gambling. It is methodically and systemically increasing the wealth or net worth by using the properties and characteristics of crypto. It's just like, it's an asset class. It has the characteristics of other asset classes, but it has velocity and accessibility that other asset classes don't have. And so we're in an era, and we won't always be able to say this. 100 years from now, they won't be able to say this, but we're on the front end of adoption. So the cash flow and the appreciation part of the flywheel have so much velocity. Even as you and I speak here, we're able to get blue chip cryptos at bargain prices. Because of market patterns.
Exactly. So last year, people were telling me, 50 grand Bitcoin, time to buy. And now they're saying, it's 20 grand. We can't buy it. We can't afford. I'm like, you are the folks who were asking me. So if you believed in it, why wouldn't you believe in it now? Right.
Exactly. And so those are the first two. And then the third wealth strategy is leverage, which is the most exotic, and must be used with wisdom and sobriety. But basically, the wealthy never sell their assets. They borrow against them.
That's a good point. Yeah.
So we use our assets, our Bitcoin, whatever. Like last year, I used during a bull market. During bear markets, you got to be more careful with these, especially if you're dealing with central custodial exchanges that aren't telling the truth about their balance sheet.
Exactly what is going on right now.
But if you have a trusted lender who will use your crypto, and there are plenty out there who have great balance sheets and are solvent and liquid, you can use your Bitcoin as collateral to get a 50, 75, 35% loan to value. So I did that last year and bought a couple of rental properties.
Nice.
Then of course you can just use the cash flow to pay off the loan. And now you own 3 assets instead of just your Bitcoin. So it's the circle of life, and that's
that's crazy. No, thank you for explaining it to us. That's crazy. So you end up owning 2-3 different assets, and that's pretty much giving you infinite returns at some point when either the loan is paid off or the property is paid off. Now you have free money flowing in, infinite returns, and also your ROT, return on time, is exponential because you are not working for that money.
Yes. And the beautiful thing, and the thing I love the most, and I think real estate investors got this right a long time ago, and especially since real estate code is so favorable in the United States, at least. But the thing I love philosophically the most about crypto is it's the ultimate expression of self-sovereignty, autonomy, self-reliance, and responsibility. Yep. And I think especially investors and entrepreneurs relate with that, or people who are seeking time freedom or ROI, or return on effort. Those things are very possible because of blockchain technology. And I think that's one of the biggest breakthroughs that happened for me mentally as a crypto investor, because I can use that flywheel now. The dirty little secret is that you can use that flywheel in any of the asset classes. That real estate creates cash flow, real estate appreciates, real estate you can use as leverage. And then you can interact with the asset classes. You can use your Bitcoin to leverage real estate, or you can use your cash flow from your liquidity investments to fund a whole life insurance policy.
Right. That's a great idea.
So you can be creative. There's a lot of creativity there. And that's where obviously having strategy and a framework and all that comes in handy.
No, that's awesome. And what you mentioned about centralized exchanges, actually, I recorded episode number 260 just last week, talking about Celsius, Voyager, BlockFi. What we can't see, they are not transparent. We can't see what they are doing. DeFi would be fine. Decentralized exchanges like Uniswap, Aave, Compound, Curve, they are doing okay. They are still trading 24/7. They haven't stopped withdrawal. They haven't done anything. But when these guys over leverage, especially what 3AC or 3 Arrows Capital did by over leveraging with Celsius, Voyager, and whatnot, you are going to have liquidity crisis. So my next question is, what kind of exchanges or lenders do you use?
Well, I had used BlockFi. I had never used Celsius.
I have used all of them: BlockFi, Celsius, Voyager, Nexo.
Yeah. Now, to BlockFi's credit, they have somehow navigated this without causing anybody's withdrawals, et cetera. But yeah, it's going to be interesting moving forward. I think my conspiracy theory of what's going to happen is that we're going to see the Fidelities and the TD Ameritrades of the world buy these guys, because they've got a buddy in the Senate that's going to pass a bill that says, "Oh, we're regulated now," but that'll be awesome because it'll inject trillions of dollars of liquidity, and all of us who've been sitting on Bitcoin or whatever else, it'll go through the roof.
And it will validate our thesis too, right? My Fidelities. And if they come in, they buy it pennies on the dollars, they will be happy. We'll be happy. Let's see.
It'll be financial Darwinism, big fish will eat. Yeah.
Now, and the next question I have, that you spoke about, getting the money or from BlockFi or whomsoever and investing in real estate. So can you share an example with us right now? What have you done? Because I saw your, I think, LinkedIn post about it as well. So right now, let's say you have Bitcoin or something, and did you buy a rental property? How did you do it? If you can take us through the process or steps.
Well, there's multiple ways depending on how you want to fund the actual purchase. Let's just say you have a $20,000 rental property that you have a contract on. 20,000 obviously is very low, but just for basic math. And then you've got $100,000 worth of Bitcoin. Okay. So you could easily just get a 35% loan to value, $35,000 loan against your 100K of Bitcoin, and then go pay and have that money in the next 24 to 48 hours in US dollars in your bank account without going through 6 to 8 weeks of underwriting and closing and all that stuff. And then, all of it, just pay cash, get the deal closed faster, and you're starting to cash flow and you pay the loan back. And what they're doing, like the BlockFi or the lender, and there's a plethora out there.
Yeah,
I mean,
yeah.
there's plenty of them. They're holding it in custodial, in a custodial arrangement until you pay off your loan. They're going to do an interest only loan or something like that with you, with various terms available. But most of the time it's something that if you, depending on the price of the property that you're purchasing, you can make the math work pretty well to where you can just use either the appreciation from the real estate or the cash flow from the real estate to offset your loan against your Bitcoin, get your total Bitcoin back, and now you're free and clear. The other way is obviously through tokenized real estate.
Yeah, that's what I've been researching and pretty interested in.
Yeah. Now the tokenized real estate is just literally, well, I'll give you the best example. Let's say there is a 10-unit multifamily apartment complex for sale, or that's being rented by 10 tenants, and you do not have $200,000 for a down payment to buy this property for whatever reason. Well, you can, with tokenized real estate, you can buy fractionally into a property. And with certain crypto protocols or companies out there, you can buy as little as $50 chunks of a property and earn daily rental income on it. So they'll pay you daily in proportion to the amount of ownership that your original investment will buy you. And what you're really doing is you're buying rights that the LLC that owns the property, you're buying rights to the revenue or the proportionate amount of revenue that you're investing in. So if you buy 1%, if you invest in the equivalent of 1% ownership stake, you have a 1% share in the rental income. And I think a lot of it is really cool. And depending on the tokenomics of the individual investment project that you're a part of, the one that I'm particularly involved in is called Lofty, and you can invest and you can pull your money out. You can take daily rental income, or you can cash in your tokens and go on. But your tokens go up in value commensurate with the real estate property. So it's literally a mirror image of owning real estate, but just on a fractional tokenized level. So it allows us to have 30,000 owners of a single property. It's pretty neat.
Yeah, so it's pretty similar to what I do, syndication, right? Real estate syndication or crowdfunding, where we have investors come in and invest with us, and we invest through LLC, and then all the investors have certain percentage of share depending on how much money they invested. So this is exactly similar, Lofty or Honeybricks, but more they are tokenizing it so you can buy and sell the token.
Yes.
Okay. So yeah, basically it's doing a couple of things. One, it's moving things on blockchain, right? So that's a good thing. Second, it's allowing people to just buy and sell. I mean, for $50, $100, you can get into the investment, not 40, 50,000, how we do our syndications, right? And
That's
you
right.
can also get, I'm guessing it's liquid, right? Because in syndications, when investors invest with us, or in crowdfunding, or when we invest in a startup through micro ventures or Start Engine, we are stuck with that investment for at least 3 to 5 years because it's illiquid. Yeah. But in this case, it's more liquid.
That's right. That's right.
Okay. No, that's pretty interesting. And I was researching about Lofty and Honeybricks. I was telling you, Profi. Yeah. So how is that experience so far?
It's been great. The only thing that I think you don't get exposure to is the depreciation
Ah,
tax advantages. And that obviously is something to pursue with a tax professional, with anybody. But if you're thinking through tax strategy, that's an interesting part. So again, going back to the crypto flywheel method, if you like real estate investing, but you really want to be involved in crypto and you don't want too much capital outlay, a tokenized real estate investment's a really cool middle ground to at least orient yourself with a somewhat conservative crypto investment that has daily action. Like if you're like me, you just like action, like if you just want daily dopamine hits of some kind of revenue, even if it's 50 cents, like great option for you to get some exposure to blockchain investing. Yeah.
No, that's a great point. And thinking about appreciation, now that you brought up another good point, is that yes, it's really important for me as a real estate investor, but I'm not worried about when I'm putting $100, $500. It's going to basically get me nothing. But this would be good for someone like me or others who invest heavily in real estate and have tons of passive losses, right?
Yes.
Because now if you are generating passive income, that's free income. If you have tons of carry forward, like every year I have at least 50 grand worth of passive losses or depreciation coming from my mobile home park or senior housing, and I'm always looking for passive income to
Yes.
offset it against, right? But if I'm able to invest in something like this, when I know that I'm getting daily income, I can use that, an offset. Now I have that money without tax free. I can reinvest, as you said, and the money is working farther for me and faster for
Yes.
me.
Absolutely. Yes.
So another question I have. So let's say you have already done it. I have not. So Lofty, you invested, you put US dollar, you invested, and do they give you the Lofty tokens, or what do they actually give you?
Great question. It's actually built on the Algorand network.
Okay.
So you can buy algo on Coinbase or whatever central exchange. And then you send it to your algo wallet, which you'll have to have either that or the Para wallet.
Which wallet do you use?
I use the MyAlgo.
Okay.
And then you connect that wallet with your Lofty account.
Ah, okay.
And then it's all then they do the custodial side of it once you make the purchase. And for those of you listening, you can actually invest in tokenized real estate with your credit and debit card. You don't have to have crypto to begin with. So it's a great on-ramp for beginning crypto investors. You can invest with crypto using the Algorand currency. Or the third one is the third way. I can't remember off the top of my head, but they had a third option where you can invest and not have to. The thing about the credit card payment is that you will end up paying that 3% transaction fee. But the other ways, when you do it with Algorand or specific, you can just connect your bank account. That's what it was. You can wire or ACH, but there's like a 3 to 5 day wait on that. So if you want instant, send crypto to an algo wallet, you're in.
And I think I like that option the best. And the reason is right now we are in a bear market. This is going to force you to buy Algorand. We know that it's going to go up. Yes. So you are going to get double cheeseburger basically by investing in real estate, which will appreciate. And when they sell you back, you are going to get it in Algorand, which would have appreciated as well.
And to your point, this is just bonus for anybody listening, but like, a great way to build wealth in a bear market is to receive payments for your services if you're a business owner in Ethereum or whatever, Bitcoin, whatever, because you're getting paid the same US dollar equivalent.
Yes.
You need the cash flow, swap it out. But if you don't, hang on a little bit and let the market ride up, and you could get paid twice, 3 times the amount for the same service.
No, this is why I still use BlockFi. And as you said, BlockFi somehow have navigated because they are backed by Gemini. which is
Yeah.
owned by Winklevoss brothers. So they got
Yes.
enough, capital and stuff. But I use my BlockFi credit card, which pays me rewards in Bitcoin. I'm like,
Yeah.
this is the only thing I'll use right now. I'm getting paid more.
Exactly. That's awesome.
No, this is great. So once you bought it using Algorand, does anything show up in your wallet like Lofty token or something which shows that you own this percentage of real estate?
No, you just have an assets overview page in your
Okay.
Lofty account, and it shows your cash on cash return, the amount of tokens that you own out of how many tokens are available for that property, and it has your current rent balance and your total earned rent balance.
And then they are sending you the Algorand every day, monthly, or how do they?
It's actually daily, so you
Nice.
you can take the rental income daily if you want to.
Okay.
And it's actually paid out in US dollar equivalent, and then you can exit back out in Algorand if you want to.
Nice. No, that's awesome. Thank you so much for explaining. I'm going to do another video on Lofty. Actually, I'll go to the entire process so that my listeners can benefit as well.
That's great.
So let's talk about the market. What exactly is going on with crypto markets right now? Of course, you and I know it's forced selling, liquidity crisis, but what do you see? Is it we are in a long winter or?
I think we've got the Bitcoin halving happening in 2024.
Correct. May 2024.
My assessment of the macroeconomic environment, and of course I'm going to be wrong the moment I say this out loud, but what I think we're probably up against, without giving times and dates, is I think we're near the bottom, if not have already touched the bottom in terms of pricing. We could revisit our recent lows, but I think a lot of the damage is done in terms of just bear market misery, and that financial Darwinism has taken its toll. There may be one or two other cascading events that happen in the news, but I think I'm not a technical analyst, but I do pay attention to the charts, and I do have people that I trust, and a lot of the patterns, just the technical analysis is lending towards some kind of respite in the market sooner than later. There's a saying, show me the charts and I'll tell you the news. It's really interesting. And it kind of aligns with my potential theory that, there's a saying, don't fight the Fed in investing. Yeah. So you've got the Federal Reserve doing the quantitative tightening.
Yep.
And they're raising rates. The minutes came out yesterday.
Yes.
And they said, we're going to, they're basically saying the same thing we already know. The market has, I think, 75 basis points priced in for July. Yeah. I think they'll probably do that. If they do only 0.5, we'll get a really cool little rally, in my opinion. The real question, the real outlier is, what are they going to do in August? Because now I'm even starting to see these meta narratives pop up going, hey, maybe they're being a little too rough on us. Maybe they're playing hardball a little too much. It's almost like this pendulum effect.
Yeah.
And if they decide not to raise rates at all in August, then I think we see a really interesting Bitcoin rally, not necessarily to all-time highs, but we could flirt with them, or at least halfway back up, and that'll be an awesome moment for everyone who didn't sell last November and December.
Yes.
Who've been going through the misery for 7 months. And that'll be a good moment for them to finally at least take some profits for everybody who's been DCAing for the last 4 months. It'll be an opportunity to take profits. After that, man, the last 2 midterm elections marked the bottom. Yeah. So something tells me that maybe we don't revisit the bottom soon, but we see more upside soon. And then after the election, something, Ukraine and Russia, massive narrative, XRP and the SEC, massive narrative, Federal Reserve and their decision-making, massive narrative. Obviously, that's tied in with inflation currently.
Right.
It's like we're on a razor's edge, man. If the SEC would have if they would have approved the grayscale Bitcoin spot ETF,
that would have been huge.
It would have been massive.
Yes.
So we've got a adversarial SEC. We've got a stubborn, late to the ball game Federal Reserve, and we have some geopolitical climates that are out of our control. And so right now, the MO is to, walk with your head up, your eyes open, and your head on a swivel, and, don't do any kind of emotional aping into anything if you have a short time horizon on your money.
Right.
But if you're a long-term holder, long-term meaning 3 to 5 years in Bitcoin, it's a great time to enter the market, because if you buy at 20 and it goes down to 15 and you bought at 20 and you didn't time it perfectly, well, A, welcome to the club, and B, nobody's going to call you an idiot when Bitcoin's at 65,000 again and you bought at 20 instead of 15. You're a genius.
That I call them as noise on the chart, right? On the long-term chart, it's not going to matter if you bought at 15 or even 25. When the Bitcoin hits 100K in 3 years,
yes,
you wouldn't care about it.
Right. Exactly. And then the funny part is then you've got other folks out there like these legendary guys like Tim Draper calling for 250K.
Yeah. Oh yeah.
Beginning of 2023.
Cathy Wood, 500K.
Yeah. And in the near term, and I'm just like, man, I don't see that. I'm not as experienced as you, and maybe they're just doing this straw man, public puppet show that is trying to, engage more adopters. But for me, it's just hard to see a 250K in the next months.
No, I don't think so. That's what Musk was doing as well. Luring everyone in with Dogecoin and then getting out as soon as he saw everyone's. So I don't trust them. But if it goes to half of 250K, I'm happy.
Oh yeah, that'd be amazing.
Right. No, this is awesome. Thank you so much. Let's take a quick break. And after the break, we'll go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Josh Rhodes pretty much gave out what he knows. He had a lot of golden nuggets, so I highly recommend. I thoroughly enjoyed about Lofty and how his vision is about crypto. So thank you so much, Josh. Are you ready for fire round?
Yeah, let's go.
Would you be changing any business or investment strategy after or because of inflation or recession?
On a strategic level, no.
Favorite real estate or finance or maybe even Bitcoin related book?
The Bitcoin Standard.
That's a great book. Yeah. Any tool or website you recommend or you cannot live without?
I love DBank as a dashboard and tool to show me my holdings in the world of DeFi.
Yeah, I like the DBank. Yep.
Yeah.
Any advice for beginner investors?
Going back to what I said, just get in the market. Time in the market's better than timing the market. So there's no reason to wait for the perfect moment. Even if it's $25 of Bitcoin, just get involved.
Oh, that's a great advice. How do you give back?
I give back through my local church predominantly. I have other nonprofits that I help support, and really ultimately my brand, Crypto Y'all, is all about merging Southern hospitality and taking care of those around you with the greatest financial technology in history, which is crypto. So my hope is that everybody in the ecosystem of Crypto Y'all will create crypto wealth and then make the world around them a better place.
That's awesome. How can my listeners reach out to you?
cryptoyall.com. that's the best place. You can go grab case studies or tools or free trainings. And if you are interested in being in one of my small group cohorts, I just do a boutique little group coaching program every month or so, where I take 10 or 15 people through my crypto flywheel method training, teaching them passive income, appreciation, and leverage. You can email me directly. Yeah, I respond to all my emails. It's josh@cryptoyall.co, no .com. It's just .co, josh@cryptoyall.co. And then you can also download a free version of my newsletter at cryptoyall.com if you just want to get in on the information side of what I'm doing and just follow along. Love for you to subscribe there.
That's awesome. Thank you so much, Josh, for your time.
Thank you. Honored to be here.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!